Hello, future CAs. Today, we're going to talk about a very interesting topic that is trending across social media on Instagram and LinkedIn. If you already know about it, great. If not, you're going to be educated in this video in detail. Whether you're a CA student or a qualified CA or anyone who is interested in investing in IPOs in the stock market, this video is very important, not just for now, but for your life, because you need to understand how do you invest in a company and what kind of analysis you have to do. I'm going to talk to you about Lenskart IPO. Everybody knows Lenskart. This company needs no introduction because of the founder Piyush Bansal, who is a shark on Shark Tank India show. So the entire country knows him. So what people will generally do, oh, Lenskart came to IPO, I can trust this brand, guys. It's an amazing brand. It has a huge PR. Let me go buy the shares of this company. Correct, you are right, because it's a company, huge company, great work done by the company. And looking at the recent past, just a few weeks back, LG made an IPO, and anybody who invested in that IPO, their money doubled hardly within a week. So everybody wants to get into these IPOs. But can I do that here for Lenskart blindly based on the trust of the brand? No. We need to analyze the financials like a chartered accountant, and let me explain this where anybody can understand. I'm going to explain in very simple terms. For our CA students, I'm going to cover two provisions of our CA Inter Law, Section 39, allotment of shares, and Section 32, red herring prospectus. I'm going to link these sections that you studied during your CA days with the reality now. Currently, this company, Lenskart, as I told you, has issued a red herring prospectus as per Section 32 of the Companies Act. And this document, do you know how many pages it is? It runs to a whooping, look at this, I'm just still scrolling, 761 pages. And the purpose of this prospectus, guys, is people read the prospectus before investing. But who's going to read 700 pages? You have to read or at least analyze. And I'm going to analyze this fully, or at least the crux of what is currently trending, in just 10 to 15 minutes max. This company is going for an IPO starting today, 31st October to 4th of November, where the share face value is 2 rupees per share, and they're issuing at 382 to 402. This is the price range. Look at the premium, heavy premium on shares. That's how most companies do it also. And Lenskart wants to raise 7,278 crores. Why they want this money, sir? For expansion. For expansion of the company. Great. We can go and invest, no, sir. But I have gone through this RHP, red herring prospectus, for about 2 to 3 hours, and I tried to analyze this in detail, and that is what I'm going to show you here. Okay, first I'm going to talk about a buyback, not the buyback by the company, but buyback by the founders and increased valuation. Let me explain this in simple terms. What happened in July 2025, just about 5 to 6 months back, Piyush Bansal, the company's founder, what he did, he went to the bank and he took a loan of approximate 200 crores. He took a loan from the bank of approximate 200 crores in July 2025. With this money, what he did, he purchased the shares of Lenskart again. He purchased how much shares? 2.5 percentage shares. And then today, Piyush Bansal has roughly 8.8 percentage shares in Lenskart. That's all, sir. Yes. Earlier, he might have had 100%. Then he would have sold it to different investors. Now, just few months back, 6 months back, he repurchased to 2.5 percentage by taking a loan of 200 crores. It's like me, I took a loan of 200 crores from bank and I purchased Lenskart shares for 2.5 percentage and I kept with me total 8.8 percentage. Clear? When I purchased Lenskart shares in July 2025, it was valued at 8,500 crores. Fair valuation of the company back in July. But what happened now? Look at this. What happened now? I'm summarizing. In July 2025, Piyush purchased 2.5% of shares by taking a loan when the company's valuation was 8,500 crores. Now, in November, when the IPO is live now, Piyush is selling these shares. So he purchased it 6 months back and now he's selling it again in IPO. Okay. But now they are saying the company is claiming the company's value is not 8,500 crores. It is valued at 70,000 crores. That means the valuation increased 8x in just 6 months. How is that possible, guys? That is the first question everybody is asking. But it is possible if the company is growing. We will come to that. The company has actually grown. So that's why they are saying the company is now worth 70,000 crores. Okay. And then what they are saying, I mean, what will happen to Piyush when he sells all these shares now in IPO? He's expected that this 200 crores worth of shares will now be sold close to 800 crores of gain he will get. So the overall gain on sale of shares is expected approximately 800 crores. That means what he purchased for 200 crores will roughly he will get it now for 800 crores. Money is becoming 4 times in just 6 months because the valuation has gone from 8,500 crores to 70,000 crores, plus most importantly company is going for IPO. Worth it only, no sir? Yes. Piyush Bansal has put so much hard work for the last 10, 15, how many ever years the company was there. So that means in this scenario, he's supposed to enjoy the benefits. Any founder will definitely want to enjoy the benefits. So it's a smart move by Piyush by buying the shares 6 months back and selling now. He is being smart. But the question is the company really worth 70,000 crores today? 8x in just 6 months. I hope you're understanding what I'm saying, guys. So for this, we need to understand the revenue and net profit of the company, guys. So let me go into the financial statements of the company, FS of the company, which is filed by the company. If I analyze the FS closely, so let's analyze the revenue numbers over here, guys. What are the revenue numbers? 2 years back, it was some 39,279 in millions, guys. Then it became 56,000 and then now it became 70,000. Good. Company is growing, no sir. What is there in this? Okay, fine. Look at the net profit or net loss. 2 years back, company had a 63 crores loss. Company is growing, they are getting better. Now last year it became 10 crores loss. And this year, in the year of IPO, they have suddenly reported a jump 297 crores of profit. That means from 10 crores loss, it became 297 crores profit. That means company is growing. That means it's worth 70,000 crores. No, sir. That only we are going to see. Look at this. Look at this beautiful analysis over here. If I have to analyze this for you guys, look at this. If the revenue from operations is growing, it is fine for me. Yes, revenue from operations from 37,000 to 54,000 to 66,000 is growing. Correct. But look at the net profit. The net profit is 297 crores. And if I come down over here, the other income that we have has increased from almost 180 crores, 140 crores to 180, and suddenly this year it has jumped to 356 crores approximately. That means can I say smartly, the entire net profit is nothing but other income. I'm repeating, the entire net profit is nothing but other income. It has nothing to do for revenue from operations, and other income has jumped. This is one of the claim what they're saying. Let's say, have the books been manipulated? It's a question. I'm not saying it's manipulated. It's only a question people are asking. So to understand this other income of 356 crores, which is nothing but your net profit, I need to go and analyze this other income more in detail. So I am going to the schedule of other income for you guys. So here I'm trying to summarize over here net profit analysis. Look at this. The question is this really revenue from operations, the net profit which they are showing, or other income manipulated? So let's look at the question over here. Now, if I look at other income, guys, if I analyze everything, what is new this year? This year they are saying gain on fair, I've highlighted already, 10 crores, close to 10 crores. They are saying, what is it, guys? Close to 10 crores. Yeah, close to 10 crores has come from gain on fair value of call option. This is nothing but I have a call option which I can sell it later, and that call option value has increased. I am yet to sell it. So it's an unrealized gain, not realized to the extent of 10 crores. Sir, 10 crores only, no, sir. I'm talking about 357 crores. Take the material ones over here. Let me straight away get into the most material one over here, guys. Two important things or three important things I want to focus. First, this 357 crore includes close to 57 crore of interest income. It is not revenue from operations. Point number two. This year, company has sold the highest amount of mutual funds. Look at this. 2 years back, 199, 641. This year, 726. So close to 73 crores of mutual funds sold. Gain on redemption of mutual funds. So other income includes interest income and a high amount of mutual funds sold. Investments sold. Is this really the profit of the company, guys? Third important one only blew my mind. Look at this. Not there in the last 2 years, but this year in the FS, they have something called FVTPL gain. FVTPL gain on deferred consideration. 167 crores, and this is the 167. Basically other income has doubled this year mainly because of this one particular item. 167 crores. What is this? Qualified CAs and CA final students will know what is this gain on FVTPL gain on deferred consideration. Let me explain this with the note itself that they have given. First, let me explain this in simple terms so everybody will understand, guys. Okay. I want to buy something for which I have to pay 100 rupees. Okay. This 100 rupees, I am paying 80 today. I paid 80 today, and 20 I am not paying this 20. So this 20 which I am not paying in my balance sheet will be a liability. Correct? 80 I have already paid, sir. 20 I am not paying. This 20 I will pay in the future. Okay. In the future, what is happening? Because of some fair value changes, okay, because of some fair value changes or whatever conditional changes, this 20, I don't have to pay 20. They are saying you pay only 18. Enough. So what I will do, my entry will be liability account debit 20. Okay. To bank 18 because I'm paying only 18, and I will write to profit and loss account 2. Sir, why are you doing this? Very simple. I was supposed to pay 20, but I am paying only 18. So 2 rupees gain. Understood? That is what happened here. What happened over here? This company purchased, look at this. The company purchased some stake of subsidiary, guys. See, this is the whole paragraph over here. I don't want to explain the whole thing over here. The summary is what is happening. They purchased stake in subsidiary. For that, if they had to pay 100, they didn't pay fully. They paid only 80, and the balance was supposed to be paid later. What was that balance to be paid later? Some 4,400, some 4,400. Similar amounts. Suddenly this year, instead of paying 4,423, they are saying the subsidiary value has decreased, the fair value changed. I don't have to pay 4,423. If I pay 1,765, it is enough. Are you understanding, guys? So they are saying to this extent, my liability has decreased. So because my liability has decreased here, look at the entry I am passing. Liability account debit to P&L, and that is only explained in this paragraph over here below, which is nothing but, look at this. This decrease of this gain of 167 crores. Now you understand. It is, they're given the star here. You generally don't read stars. No, look at this. It is on account of extinguishment of financial liability by 4% relating to purchase of additional stake in some own days limited. That means extinguishment means I don't have to pay this liability anymore, so it's a gain. But is this an actual gain? Is this an actual profit? Is this something which I can claim into my net profit of 297 crores, guys? And that is only there in my 356 crores of other income. Have you understood this in detail, guys? This is the second one. What is the third one? Like this, I can keep going on and on and go on and find a lot of things. Let me quickly show you a few things which you can understand. Trade receivables and trade payables. Let me go to the balance sheet, guys. Let me go to the balance sheet. This also, there could be many reasons, but look at this. The trade receivables of the company, look at this. The trade receivables of the company from 2,800 something increased to 3,400, but this year trade receivables reduced to 1,258. Okay, trade receivables reduced. Now because trade receivables reduced, that means what company is doing? The company has now put more efforts to collect the money, or they are not giving credit this year. Okay, but at the same time, look at this. Trade payables increased. Trade payables totaled some 5,600, 4,900. This year, it became close to 7,300. The total of this is almost close to 7,500. It's close to 7,500. That means, look at this. My analysis over here is basically, hey, trade receivables is decreasing and trade payables is increasing. Are you getting it, guys? What is the effect of this? When trade receivables decrease, cash flow will increase. When trade payables also increases, my cash flow will increase because I'm taking credit. That means what the company is doing to its customers, it's not giving credit, or it's collecting soon. But from its vendors, it's taking more time, or the vendors have increased. Okay. This is only overview. I can go in detail. We can go in detail. I don't want to take much of everyone's time. We can go in detail and we can analyze this change because of this trade receivables and trade payables difference. Look at what has happened. Okay, look at what has happened. Okay, what has basically happened in the cash flow statement. In the cash flow statement for all the 3 years, this year alone, if you see, cash flow from operating activities, 2 years back it was only 947, last year 4873. This year my cash flow from operating has become a positive 12,306. Because of what? Because of the exact 3 things I told. Look at this. Trade payables, like I said, is positive. Trade receivables, which was negative in the last 2 years, has become positive this year. And one more new thing has happened this year. Financial assets, maturity of deposits, last 2 years, which was negative and very nominal, this year is close to 4,000 crores deposits have matured. That means from bank it has come into my cash. Are you following, guys? It's a short-term investment kind of thing. Okay, I'm not getting more into this detailing. There's actually a lot over here. So basically cash flow has increased over here. Yes, really cash has increased, but look at this. How trade receivables, that's what I wrote here. Trade receivables, trade payables, other financial assets and deposits have significantly changed this year. So my question over here is only one thing. Only one thing is, will I believe this 297 positive net profit, and based on this, will I invest in this company at a valuation of 70,000 crores? Because I feel, or I don't feel, the market feels, and everybody online feels, maybe this year the financial statements were they manipulated? We don't know. I don't want to comment on that. But many of them are claiming that all this looks in such a way so that IPO will go very well and at least the founders and those shareholders will make profit. But will they really make profit? We only have to wait and see after November 4th. So will I invest? My personal thing is answer is no. But if I didn't do all this analysis, if I just went with the brand of Lenskart, maybe yes, definitely yes, I could have invested because the brand of Lenskart and Piyush Bansal is very, very big. Will you invest? The question is, will you invest as students? Let me know in the comments of this video. If you have watched till here, what is your thoughts? I have analyzed only other income in detail, guys. I have not analyzed the what to say cash flow statement or balance sheet in detail, but I only shown you a little trend of trade receivables and trade payables, which I feel is a little odd because suddenly trade receivables is dropping and trade payables is increasing. There could be various other reasons for that, guys. I could be wrong also. I want to give that disclaimer over here, but this is what I want to explain to you in detail, and this is what is there on social media today regarding the IPO of Lenskart. And that's about it, guys. I hope this video gave you some insights as to how you have to read and analyze a red herring prospectus, guys. That's about it. See you all in another video on a different day. Thank you. Tata. Bye bye.